Welcome to the Gray Report. I'm your host, Spencer Gray. And if you are a multifamily investor, I'm an aspiring investor, an industry insider, or you just like the idea of creating generational wealth and passive income through investing in multifamily apartments, well, fortunately, you're in the right place. Today, we're going to be doing another kind of recap of everything that happened in the multifamily industry, real estate, and the economy this week. Today is Thursday, July 15th, 2021. And as usual, a lot of things are happening in the economy, in the multifamily industry. I am reporting on location from the Texas regional headquarters of Gray Capital. I'm here in Dallas, Texas, here for an exciting conference. We're going to be at Michael Blanc's Dealmaker Live here in Dallas, Texas. But again, like every week, we've got the Director of Communications and Marketing, Dr. Matt Bosnagel, coming on the show again to give us some more insights for what happened this week in commercial real estate, multifamily, and the economy. But just before we get into it, just a quick word from our sponsor. This episode of The Gray Report is sponsored by GrayReport.com, the leading multifamily intelligence aggregator, delivering you all of the most up-to-date research reports, articles, opinions, insights, all revolving around the multifamily industry, real estate, and the economy. And so if you're an investor, you are a multifamily insider, check out GrayReport.com. Again, all this information brought to you up to date every single day, updated 24/7. All right, Matt, what's going on? How is Indianapolis doing? Again, I'm out here in Dallas, going to be networking with some other real estate investors. But how's Indy doing?
Oh, it could be sunnier, but it is sunny.
Okay.
It's doing great.
That's good. That's good. Well, it's probably at least it's not as hot as here down in Texas.
Yeah.
So take a little bit of a reprieve. But so okay, well, let's get into the Gray Report. Another exciting edition. And again, if you'd like to receive these newsletters, you can hop on over to graycapitalllc.com and sign up for the Gray Report. This is a free service, a free newsletter. It comes out once a week, every Thursday at 8:30 a.m. So it's going to keep you up to date, even if you're tracking this stuff. I guarantee you miss a thing or two, and we have so many multifamily professionals that reach out to us every week saying, the Gray Report, the newsletter, it is part of my weekly ritual to try to stay up to date with everything going on. So don't miss out. Check it out right now. All right, let's look at the headlines for the Gray Report newsletter. Again, construction and lumber on the top of everyone's mind. Build, buy, or break down. I hope we're not breaking down, Matt. What's going on?
No, breakdown, as I mentioned, seems a little unlikely. Last week, I described the enormous opportunity in front of the commercial real estate markets and multifamily specifically. And this week, with lumber prices coming down significantly, it looks like a major barrier has been lifted, further encouraging some healthy activity in the market. Not frenzied overzealousness, but stable, less volatile activity. The broader economy, I think, is a similar story as last week. Unemployment's lower. Q2 reports have headlines like smashed earnings expectations and blew past projections. There was a third one I forget, but all of them synonyms of that. Yeah. And all of this optimism is kind of tempered a little bit by an increasing concern about and an awareness of an inflation reality that really is no longer confined to speculation in the Wall Street Journal or the Financial Times. So things are getting more realistic and measured, I think, in terms of the economy, but things are still going really well. And I think that we still have a lot of growth left in it.
Yeah, it seems like, we've got incredibly strong growth in a lot of different sectors, but it seem like it's too hot just yet. I think, there's still that risk of overheating, but, right now, we're seeing, like you said, earnings growth go along with pricing growth. And, on the multifamily side, kind of translating that, we're seeing the rent growth that is going alongside kind of this price growth and cap rate compression. And so, we've seen the top line growth, because it would be concerning if we just saw, the assets inflate without the rents increasing, revenue staying flat, but the price, because then that's when things get really expensive. But if the income for, whatever type of business, whether it's an apartment, whether it's a, tech company or tech, if they even make any money, but, you want to see those incomes grow. So whether it's stock market, you're looking at PE ratios, or in real estate, you're looking at cap rates. you want to see growth on, on both items. You want to see some sort of price appreciation, but we want that most of it to be driven by revenue, not just speculation in buyer interest. Right now there's
Yeah.
both. But what the result of this, is hopefully is that, we may not see cap rates compress too much further. Maybe I think in the short term we might see it because I'm just getting ahead of myself a little bit. We are seeing so much rent growth right now. I mean, we're seeing 10% rent growth, 15, 17% rent growth in some markets. And so, if you're looking at harnessing that rent growth, you could afford to pay up with a lower cap rate because you're going to get the revenue growth on the top end as well. So you can still make your returns. Now, once that top line growth kind of levels off a little bit, or people just are a little bit unsure about it, because we can't continue to grow at that pace forever because we have to see wage growth, and that's really what we need to see. I mean, rent growth is great, but if we don't have to see the wage growth to back that up, you really can't get those rents. But if we see wage growth, we see rent growth, then cap rates can at least stay stable. You still see prices increase, but it doesn't get too frothy. So I hope we kind of have that Goldilocks scenario for multifamily industry and the economy. But yeah, I think there's a lot of reason for optimism, a lot of reason to still kind of keep an eye out for the weather, because things can turn, we can't overheat, things can happen. We don't want to be too complacent, which is probably the biggest risk. Of everyone saying all is good, we've got so much growth, it doesn't matter anymore. I don't see that happening right now, but something we definitely want to kind of keep an eye out for. All right, so let's just do a real quick little snapshot of rates and markets going on, and we'll try to keep this relatively brief. The U.S. 10-year Treasury yield clocking in at 1.42%. It's a little bit elevated from last week, but much below kind of where we were about a month ago. 30-day LIBOR coming in at 0.09%. SOFR 0.05%, in that spread between the 10-year Treasury and the 2-year Treasury clocking in right about 114 basis points. HUD interest rates for HUD 223F loan, 2.4%. It's a little bit higher, but still really low. HUD 221D4 clocking in around 3% or so. That's for those new construction 40-year AM loans. Fannie Mae and Freddie Mac, again, these rates can depend on the market, the deal, the sponsor. But for the quote that we had for a 10-year deal, I think Fannie 2.95% and Freddie 2.85%. That's a little bit lower than it was last week. So that's pretty interesting to note. S&P 500, stock market has still been growing. We're seeing all-time highs, a little bit dips here and there, but 4,374 on the S&P 500. The iShares residential ETF, RES, this is, REIT that tracks, multifamily REITs. A little bit of an increase from last week, $88.03. Gold coming in at $1,826 an ounce. The steel index, steel is still relatively elevated, not as much as bad as it was, but still elevated at $1,773 per whatever length of steel. And then random length lumber futures coming in at $600 for however long a piece of lumber that they are tracking. And that's way off the highs, and we definitely seen a mean reversion, to say the least. And I think as Matt mentioned, and in the headline of the article, I think it's a little bit of time to pause and take some relief that it's not too crazy. Crude oil essentially flat from last week, $72 a barrel. Bitcoin, not a whole lot's changed, just been hovering in this kind of low 30,000 mark, $33,088 a coin. And Ethereum, $2,000 per ETH. Okay, well, that's all fascinating. As always, you want to keep track of these things. We want to know, because markets are correlated to some degree or less, or more, depending on what it is. And so you want to kind of see what's going on, because certainly everything affects each other one way or the other. Okay, let's kind of get into, let's further discussion on lumber prices. Looks like we got a good article from Market Insider. Matt, I'm curious on your take, because as we said, lumber's come down quite a bit, and they're saying lumber could be headed to as low as $350 per whatever random length future that board of lumber by August. One analyst says. Is this analyst full of BS, or what's the story here?
Well, okay. So there is another article also, I included it in the in the report from Fox Business that says that you can expect lumber prices to go up due to consistent demand. But I think on balance, I think it's worth looking at the general price trends of lumber and thinking about the labor shortages that are easing up, and maybe and how these sawmills are starting up. I think that it's a good idea to restart or start some halted projects if you're a multifamily developer. Now, I think that this is not going to have an immediate effect on the multifamily market or the CRE markets, because these prices need to work their way through the system. A lot of the way these are multi-year sometimes projects, but lower lumber prices will be a huge help for things like home builders and single family homes or renovations. And it's going to create more housing supply to meet the enormous demand for housing. And part of the pricing, I think, does take into account, the future cost of homes and the future cost of development. Yeah. So it will have some ripple effect, not an immediate dramatic effect, but it sure does look like good news from where I'm sitting.
Yeah, it seemed like we were pretty unsustainable from where we were. In the one, I think it's giving some developers more confidence of saying, okay, it's not as crazy. Let's go forward. It's hot market. Let's do it. But I think there's still some folks, and I was talking to a retail developer down here in Dallas 2 nights ago. And it's just that the volatility is enough to get some people to not develop and saying, okay, yeah, great, it's lower today, but where's it going to be next week? Maybe it's not even lumber. Steel is still high. There's a lot of this discussion over a lumber squeeze coming up because so many tires are needed in the developing countries like China and India. All of a sudden, everybody's driving, and we need all these tires, and we just don't have enough rubber. And you think about how many rubber goes into so many pieces, whether it's just so many components. So I think it's just that uncertainty and volatility that kind of needs to work its way through the system, and a little bit of stability. But we've only been out of the pandemic for, well, some say, technically it's still a pandemic. So I think a little bit of time to get people to kind of forget about last year to as much as somebody could to kind of get that confidence back. But it's fascinating. To say the least. All right. Okay. Now, not really talking about lumber anymore, more on infrastructure. And, infrastructure is, it's not directly tied to multifamily, although, housing has been discussed as a part of infrastructure on the affordable side. There's a lot of, movement from the Biden administration to increase the amount of availability for its tax credits, building more affordable housing. But everyone's talking about infrastructure. How are we going to pay for it? And really, there's going to be tax hikes. What is going to happen? A lot of different proposals. It seems like we're getting closer. Matt, what's your take?
So we talked about a little bit about this last week, about not specifically the infrastructure bill, but more of perhaps like the taxes that we may see, and things like that. And again, I don't see significant tax changes in the future as it pertains to the CRE and the investment market in general in terms of capital gains or 1031s. I think we will see that coming, and a lot of the funding in this bill talks. I think that you mentioned it too. Is the funding is going to come a lot from COVID funding that maybe was not spent or something like that. But it doesn't, this article in Globe Street does not signal a potential negative impact of this. It only really talks about the positive indirect effects of having of making it easier to move goods from place to place. So the retail and the industrial sectors, that'll have a net positive impact, I think, because these two sectors are so involved in the timely delivery of goods. My question, and this is more of a general question, is the industrial sector has just been incredible. Whether it's stories about how there's very little availability in certain markets, or how existing industrial properties are just skyrocketing in value, and warehouse demand continues to soar. My question is, how much of this warehouse demand, which is a pretty significant aspect of the industrial market, is tied to the inability to move things quickly. There was a lot of discussion about, and there still is, about this shift during the pandemic and in its wake from the just-in-time model, which is you'll ship in your parts and you'll have them there because shipping's reliable.
Yeah.
But then when shipping becomes not reliable, like it has been for the past year and a half, really, or maybe more like a year, but either way, to this just-in-case model where you keep your warehouses full. Some of it. Yeah. And is that going to mean that warehouse demand shrinks, or is there other factors? That's just the big question that I have: is how is industrial going to react to the changing conditions moving forward?
Yeah, I think it's a good point. I mean, I think though, the whole trend, for e-commerce was already in full swing prior to the pandemic, and there's huge industrial demand before COVID. And, as so many people became it's like, who wasn't using Amazon, before, but there were a lot of people. There's still people that, that weren't. And it's not even, some people are like, yeah, I've bought something from Amazon, but now they're like buying everything from Amazon, they're getting, now all of a sudden they're not paying to get the Clorox and to get their household items where they would just go to the grocery store. All of a sudden, well, let's just get on Amazon. I mean, even for us, I remember prior to the pandemic, I remember talking to my wife, Alex, being like, she was like, oh, I've got to go to this store and that store. I'm like, why don't we just get it delivered? And she's like, no, I want to go to the store. It's fine. And the pandemic hit. It's like, okay, well, let's just get it delivered. And we can continue to get stuff delivered relatively frequently. And I know we're not the only ones. And so there's so much more use of and need for e-commerce. And then this whole idea of not just having fulfillment centers kind of, outside of the cities, but this like last mile delivery. I think that's still, that infrastructure still needs to be put in place. And I think there's probably quite a bit of growth. But even if, I guess even if it switches more to like a just in case, so were you saying just in case is going to increase the demand for warehouses because
that's the immediate,
because it's like, we got to have all this stuff on board. And then if it switches back to just in time, maybe we don't need the space. Yeah. I mean, I think that's a good point. But I think that we needed the space when it was still just in time also. Yeah. So I think that's going to keep going. But I also, you got to kind of track it, and it's easy to it's something there's a lot of growth and that's in demand. You can still oversupply. There's multifamily markets that have incredible growth, but they're oversupplied. There's still too many apartments. Yeah. Now that slack's gonna get tightened up relatively quickly, but you got to make sure there's a good balance there for sure. So that's a good point about the immediate effects of kind of improved logistics. And the long-term effects of the increase in e-commerce may just outpace the immediate effects completely. Yeah, well, and we shall see. But let's talk about another COVID pandemic related issue of, is it going to stick around? Is it going to kind of fall by the wayside? Who's still working from home? Who's not in the office? Obviously, a lot of people still are. It's going to be controversial because a lot of businesses are like, hey, get back in the office.
Yeah, there's this article on the return to the office. It really isolates a really strong trend on how many workers are returning to the office. It looks at how different jobs are returning to the office at different rates. And again, it's looking like the beginning of the return to the office sector. There was another article that I didn't include that mentions that 77% of new real estate job ads require a return to the office. So for the real estate industry, we're coming back to the office. And largely for workers in general, they are coming, they're not working remotely anymore, and they are returning. It may be too soon to make this call, but I think that things are changing measurably. Mm-hmm. There's a benefit to being in the office. And whether it's through the ease of collaboration or communication or the spread of ideas from different departments, from different coworkers or from your boss, really being able to have these like 15-second or 5-minute 5-minute talks with people, being really free from the friction of having to send an email, and open up the email, or send it even just like a text message or a phone call or setting up a Zoom call, God forbid.
Yeah.
And to be honest, given these benefits, it never really seemed like the office market was ever really that worried. It never seemed like the office market was tanking throughout the pandemic. There was this sense of stability in the face, and I will admit that I was alarmed a little bit a month ago at how poorly office demand was doing. But it doesn't seem like that this is going to be a long term. I think things are coming back to the office in a big way, and that's
no, I think so many people were so quick to say that the world that we're going to emerge in 2021 or whenever post pandemic was going to just look nothing like life pre-pandemic, and I think people didn't put enough credit to how short term our memories are, and people are going to be putting really 2020 in the rearview mirror much faster. I mean, go out to a restaurant right now, go out into a public space. It looks like 2019. People are shaking hands, like you said. People are hugging. We're falling back into these old ways, and that includes going to the office, going out. I think there are trends that were already in motion that were accelerated, and instead of taking 10 years, it happened in a year. And I think we're going to be more flexible, and there's going to be hybrid models, and maybe not so stringent on you have to be in the office. But I think if it was Morgan Stanley or Goldman Sachs, in New York City, they were saying, look, if you're going out to a restaurant, you can come into the office. Like, that's BS. Yeah. Get into the look, come on, let's do this. And some folks, sure, like you don't have to come in. That's fine. Be a freelancer. There's a lot of different roles, and I think that diversity is good and fine. But and this is just personally, like I like people. I like being in the office because it's like I just feel like we get more work done. It's more collaborative. Whether it's the water cooler talk or it's the like popping in the office to be like, hey, quick question. We can dive a little deeper that I probably wouldn't have like picked up the phone because like, okay, am I going to bother? Are they doing something right now?
Yeah.
I know they've got a call, but like now I can just, mosey on over and peek in, like, okay, they're free. I can pop in for just a quick second. And then also, it's as, for employees, it's like, don't you want to be, I don't know, you think that your employer is going to, it's all about relationship. I mean, everything's about relationships.
Well, and that's something that I wanted to say too, is that people are returning to the office, it's more than habit, I think too. It's also like there are benefits to coming to the office. And a lot of the discussion about work from home and the return to the office, it seems like there's this unstated argument that of managers babysitting their employees. There's these articles and these testimonials about the monitoring software that remote workers have to have. And I don't see the real benefit of going to the office as like people keeping an eye on people. I think that a workplace is the people in a workplace are naturally closer if they're in the same room together. And I think that makes people more productive.
Yeah. Well, people do team building for a reason. I mean, it can come across as, whatever, people, you can have your opinion on team building, but like, it is a team effort here. And how do you build those bonds and collaborate and build trust remotely? You can do it 100%. You can do it. But, and again, it sounds lame, but it's like, all right, can't do the trust fall exercise, on Zoom that easily.
Yeah. And
we should start doing trust fall when I get back. We should do some trust falls.
From
Madison's desk.
Yeah, that's good. I just think it's really interesting how some of these companies, these big companies, like some technology, like Facebook and stuff and Google, they're encouraging remote working. And I wonder what their calculation is, because there really is a benefit of coming into the office. And I wonder what is lost. And there have been studies that say that remote working is more productive. And obviously you don't have to deal with that drive time, but I think there is something that's lost.
Yeah, well, I wonder when and I know there were studies that said that, but I'm wondering if those studies were done like Q1 to Q2 of 2020 when like working from, because I think there's also been
Yeah.
studies shown that like productivity increased early on in the pandemic. People were like, okay, no, I'm going to show that working from home is going to work, but then 6 months later, productivity dropped
Oh
significantly.
yeah, not of well, and these and from just this is just from because I'm kind of interested in this. The studies don't all say the same thing, and depending
Yeah.
on what's being measured, what kind of work is being measured, and what time period is being measured, the productivity gains are not as high and or nor as dramatic as you might expect.
Yeah. Yeah. Well,
But again,
it's a brave new world. Yeah.
yeah, like you said, when we were talking about the e-commerce, this is just a long-term trend, and there was a short-term disruption, but you got to kind of take the long view on this, and I think that it's not going to be as dramatic as people.
Yeah. And so I guess just trying to tie in multifamily, because we've reported on articles and, saying, the new trend is going to be bigger units and, having a home office. I'm curious if that's going to stick around, how sticky
Yeah.
that is. If people are saying, well, yeah, I'm going to be working at the office, but maybe I'll be coming in, maybe I want to be able to work from home. I want to
Yeah.
have a space still. Or if, again, we go back to our own ways and people saying, well, I don't want to pay for an extra space. Like, okay, yeah, I would like one, but do I want to pay? Do I want to get a 2-bedroom or
Yeah.
pay for a larger unit apartment with a den or something? Or would I rather keep that couple $100 a month in my pocket and, do whatever else with it, go out to eat?
Yeah.
So we shall see. The New York Times, they're probably slightly biased towards the city being,
Yeah.
urbanists, but COVID didn't kill cities. Period. Why was that prophecy so alluring? If you talk to folks, some people are like, "Oh, the cities are still dead." They're like, "Well, I haven't been in a city for the last year." But Matt, well, you had a really good take on this, so
Yeah, I think this is very much like a New York Timesy kind of article.
Yeah.
They talk to like sociologists and historians, and they present a kind of like a little bit of an academic take on the return to cities. They talk about how maybe it is due to like basically, and this is what we have been talking. And maybe they should have interviewed us, but we've been talking about.
I think we missed their call or something.
Yeah. We've been talking about this honestly for about a year about this urban exodus, and I remember one of our earliest recordings of these videos talking about how my take, people just like saying the word urban exodus, but that's
I think people like the word. I think people like the word exodus in general.
Yeah. But it cites like kind of an ideological element of American society, kind of like an agrarian Jeffersonian thing. There are critiques about overcrowding and high cost of living, but a lot of this, the upshot to the article seems to be that a lot of these critiques, which were present, like I said, since the time of Thomas Jefferson, it does not reflect how some people either cannot afford to live in the city or do not want to leave, or I'm sorry, cannot afford to move out of the city. And or do not want to leave. And this pairs very well with the apartment list article that talks about that talks about migration, and their finding is the more money you make, the farther you can move, and that makes perfect sense. There are people that do not have that mobility, and it doesn't matter what the critique of urban life is. That's where their job is. That's where they're living, and they do not have the means to move out. There are benefits to cities, and like I said, kind of at the top a little bit, this is one of these trends, and one of these just a set of living conditions that aren't going to change very quickly.
Yeah, no, I think it's all good points. I mean, living in the suburbs, it's typically it's a luxury. I think the cities are almost viewed as more of luxurious living, but that's for a pretty small percentage. Most people are living in an urban area because that's close to where their job is, and they can't afford the commute or the commute time, and they can find a more affordable place to live. They can't afford backyard and a pool and big lawn out in the suburbs. And everyone's saying everyone's going to be moving into a single family home. even if everybody wants to, unfortunately, not everybody can. Like I was saying,
Yeah.
well, everybody wants to fly in a private jet, but not everybody's going to. It's it's just there's not enough private jets, and no one's got the money, and it there's not enough single family homes out there either.
Yeah.
Nor does everyone actually want to, but just people just simply can't afford to. So yeah, it's. I mean, there was definitely it was a combination of. I mean, the whole. I mean, obviously, the COVID happened, and then between the some of the the protests that happened and kind of the violence, there is more violence, the crime rates have gone up cities across the United States, and so there it's definitely um reminiscent of white flight back in the 60s and the 50s and the 60s, people moving out to the suburbs, getting out of the cities because they were afraid and they wanted that American dream. And then also it's demographic.
Yeah.
Millennials
That's
are
what
at
I'm
that,
thinking.
they're at that, they're 30s, they're getting married, having kids. They're like, oh, I want to be in a better school district. I want to have a little bit of a yard. It's no longer just me and a mattress on the floor. I gotta actually provide. So let's move out to the suburbs because I can't even find a house that's not built before 1960 in the city anyway, and I don't want to have to screw with that. And I get that. I've lived in
Yeah,
old.
I remember.
Yeah.
I remember you said this last year again in our discussions about the quote unquote urban exodus. Is people were moving out of the cities a little bit before the pandemic hit,
Yeah.
because these millennials are coming of age and they're getting to that raising a family age
Yeah.
where they kind of need a different situation.
So, I think that those are trends that are going to continue. And I think cities are going to have it's a little bit of an uphill battle, but I think there's a floor though. It's not like cities go away. There's this floor. People, that's all great stuff. Not a lot of millennials can afford to move out to the suburbs. Sure. Mm-hmm. Some can, not all can, because not all are having kids. Not all are getting married. So, but I do think it is on cities to make themselves more competitive, and you can't rest on your laurels, because you go to these suburbs and we've mentioned this in the past, but it's not like it's no longer just a cornfield and some subdivisions.
Yeah.
These suburbs have all these mini urban cores with the restaurants, entertainment, nightlife, parks, everything, good schools. And so they offer all the amenities that most folks want to see. And so cities have to provide value that is going to differentiate themselves from the suburbs. And, whether that is, the social theater that you find in cities that you don't always find in suburbs, or, whether it is just more variety and diversity of arts and entertainment and food and shopping and whatever. But they got to think outside the box a little bit. And, so I think we shall see. I don't think
it is interesting how and I think you isolated a trend that the New York Times kind of elides a little bit. They said that this is not a story of population or power redistributing away from New York as a superstar region, but one of a metro area that is growing even larger to encompass to encompass more outlying towns.
Yeah.
That to me looks like another way of saying people are moving into the suburbs. But
yeah,
that's a New York Times way of saying it.
I think you're right. I think, okay. So how else do you take that? I mean, I guess it's true, but it's like, it's people have to come from somewhere, and they're come from the cities or they come from elsewhere. I mean, elsewhere could be like immigration, and immigration has been kind of declining, and but they have to kind of come from somewhere. If they're not coming from the city, they're coming from another suburb. But I do think there's some truth in that though too. And you can have a city and you can have the suburb, and both can be hopefully thriving in different places for different folks, different different strokes, different folks, varieties of spice of life. And it doesn't have to be either or. And like I'm personally, I've been conflicted my entire adult life. Because I've lived. I've lived in like college towns. I've lived in Manhattan. I've lived in Brooklyn. I've lived in a farm in rural Indiana, and now I'm living kind of in the city in Indianapolis, but not really kind of sort of Indiana city, but not sort of suburban part of the city. Because I like the cities. I like the country too. And like, it's like, are you a city kid or, country boy? And it's like, yeah, do I have to choose? Can I go and, shoot guns on the weekends and go fishing? But also like go to a cool restaurant and go shopping downtown. Also, can I do both those things? Whatever. But, yeah, variety, spice of life. But yeah, good article. Any closing remarks, Matt?
No. Again, another great week. I think that it does. I think what you mentioned before. It is not like every choice you're going to make is a winner in this economy. But if you're making smart decisions, there's a really great chance that you're going to succeed. So there's a lot of great opportunities out there.
Yeah, I agree. I don't let these opportunities pass you by. I think we are going through a once in a very unique opportunity right now. I mean, this has been a once in a lifetime, I think, occurrence. I don't think we're going to see the same factors. Could we see other pandemics? But sure, I don't know. I think they'll be probably different. But we're seeing massive wealth creation right now. Massive wealth is being created, and it's also being destroyed in other areas. And there's being, so just I think you need to be an active participant in being smart. You don't have to reinvent the wheel. But for those who had themselves allocated last year, whether that was in real estate or that was in the stock market, well, you did a great job and you've been able to really grow and create some incredible wealth just over the last year. And I think that's not going to, I think that's going to be an opportunity that's going to still exist for at least a period of time. I don't know for how long, because I think we're going to see some sort, there's going to be corrections and mean reversions along the way. But if you can ride some of the coattails of some of these longstanding, demographic trends like we do in multifamily, I think you're going to come out on the right side of things. But it doesn't mean you still have to be smart, agile, and discerning. So,
keep your eyes open.
Matt, exactly. Keep your eyes open. One eye out for the weather. All right, Matt, thank you again so much for all your work on the Gray Report. This is a great episode. And now, for all of you, again, if you're interested in signing up for the Gray Report newsletter, if you go to graycapitalllc.com, you see there's this little button, sign up for our free weekly multifamily report. You just click that and, pretty quickly and easily sign up for the report. It says, don't miss out. Here's a quick, little preview of a previous report. Really easy. Just your email. We don't need your name, but we'd love to have your name so we know who you are, but it's all good either way. But what if you're saying, I love the newsletter. I love what you guys do. I want to participate. I want to do what you guys are doing. Well, join the Great Capital Investment Club. It's the only way to see real investment opportunities, at least the first way to see them. And, we don't need a lot of information. We do want to know your name, though. And we need your email address. And then a couple things about you, what you're interested in, what you're focused on, your criteria. Sign up for the club. And then you'll have an opportunity to have an investment strategy session with an expert, multifamily expert from Great Capital. And, we really kind of dive in about what you're looking for, your strategy, your goals and objectives. It was that easy. I just did 2 clicks. I just, a couple things, bam, I'm in the club. You can schedule an investment strategy session. Oh, wow, this is with me. Cool. But you got William right here. You can ask him some questions. William actually, I think he's getting on a plane right now. So I don't know. I don't know if he would respond, but great. I want to schedule time with myself. Great. You can do that. Hop on a call. We'll go over exactly what your criteria is, what you're trying to do in real estate, your why, whether your real multifamily syndication is right for you. Maybe it's not. A lot of folks, it isn't. There's a better strategy for you. We're all about seeing everybody succeed, get just as much pleasure, having someone come on board, partnering on one investments as saying, I don't think what our strategy is right for you. Go this way, be successful on your own. We'd love to see it. All right. My name is Spencer Gray, president of Gray Capital. You've also been here with Matt, the director of communications and marketing at Gray Capital. We will catch you next week for the Gray Report newsletter. And again, sign up for the newsletter so you can get all this. And again, we covered 4 articles, 5 articles.
Yeah,
Matt.
Not all of them.
Not even close. Not even a fraction. I mean, let's look at this. What is it? 1, 2, 10, 20, 30, 100.
Yeah.
It's a lot. 1,000. It's a lot. It's a lot of good content. And we get people like, how do you put all this together? I'm like, Matt figures it out. We've got the systems. We put it in place because this is what we needed to stay in. We need to stay up to date. We needed this information. I said, our investors, they need to stay up to date. Folks are out there. They also need to stay up to date. And so you can get the newsletter, you read the newsletter, you stay up to date. And then, if you want it consolidated, you just like hearing us ramble about this stuff, you can watch us on YouTube like you're doing right now. And it'll be kind of this cyclical thing that kind of keeps going back and forth, in and out. You get the newsletter, you watch the videos, you invest, you get the newsletter. But if you invest, you get a lot more information, because if you're in the club, you're getting all kinds of content from us. So who's this guy? Anyway, all right. I'm Spencer Gray. That's it. That's enough for this week's edition of the Gray Report newsletter roundup. Everything that happened in multifamily, real estate, and the economy. Have a great week. See you then.